Hello folks, wasn't expecting a video today, were you? So yesterday, like I said, I got home a little late and wasn't real happy with what I was going to cover because everything that's been going on the last couple days with my daughter and just scatterbrained. I figured I'd go in and do some work today and give you a teaching with the things I used that we haven't really given that much coverage with in the mentorship. So you'll see there were buttons being pushed, obviously, so I'm not just pulling things out of the hindsight left side part of the chart. And we're going to cover when the market is indecisive, like we have here, the dollar index in here, consolidating inside of the daily fair value gap. Okay, so you know this is your premium high, discount low of the daily fair value gap. I'm not going to go out to the daily charts, otherwise this video will be a lot longer than I need it to be, and I don't want it to be that long. So we have FOMC, the likelihood of this staying consolidated ahead of Wednesday's announcement, very likely. So with that said, in your notes, whenever dollar index is in consolidation, okay, when it's in a holding pattern like it is here, the market's not showing a willingness to want to get somewhere in a hurry. It isn't trying to get up there higher, it isn't trying to go back down here lower either. It's staying inside of the range I've given you, and the parameters being as they are here. Parameters being the premium and discount levels of that daily fair value gap. So if dollar is in consolidation, that's not bullish, that's not bearish, it's neutral. So then you go to the next stage of your analysis, which is, now let's look at the Euro futures contract. Okay, so I'm not pulling up FX, I'm only going right to the continuous chart, which is the symbol you can see right here. If you type that in, it'll give you the euro dollar futures contract price on a continuous basis. In other words, it's plotting every nearby contract until it expires and then goes to the next one. Here we have a buy side imbalance, sell side inefficiency, and we saw last week it traded down below that low. So now this whole range here has been balanced with downside delivery. Inside of this price run lower that completely closed this in and took out this pool of liquidity for sell stops, where is the imbalance? Right there. Okay, it's also this low and this low. There's really no need for it to go back up into here because we passed down to that level here once, twice, 3 times. So this level here, once it trades back up into that level, that's pretty much what I would expect as an upside for a consolidation day. It's Monday, it's the beginning of the week, it's FOMC, dollar index is consolidating. So it's potentially going to be capped on the upside. So what I mean by being capped, it's not likely to continuously press through that. It can, and that's fine, but I don't think it's going to go up that far. So this currency is mildly bullish. Okay, so we have dollar consolidated, euro mildly bullish, because notice we have here Sunday's gap opening, came back down in midpoint of the gap, consequent encroachment, then rallies to the imbalance here. Inside of all this buy side imbalance, sell side inefficiency, which has been rebalanced, then we go inside of this small little imbalance there. So essentially we've worked this low, price went lower there. In other words, once we went below this low there, all of this range becomes a factor. And then we come back all the way up into that and rebalance that as well. So it's met its upside objectives in my definition for a consolidated day. It doesn't need to go any higher than that. So we have the euro likely to be bullish up until this point here with dollar being consolidated. Now, does that mean euro dollar is a buy? No, it does not mean that. If you recall, and you've been here for a while, dollar index being in consolidation sets the stage for what? The crosses to be manipulated. And what's a cross? Euro pound, euro yen, euro Aussie, euro New Zealand, every cross like that. But you have to look for the weak ones compared to the strong ones and then pair them up accordingly. So we have mildly bullish euro. It's not bearish. but it's not wildly bullish either. So it's moderately bullish, less likely to go down, let's put it that way. So we're canceling out dollar for now, and we're going over to pound. So we're going to pull up the pound. Again, this is the futures contract continuous chart. Okay, and same thing here. We had initial weakness on pound. Then it rallies back up into a buy-sell liquidity pool. And with dollar consolidated, this is enough of a run in. That's it. You're done. There's not a lot of movement expected in pound. And it goes right to this level here and stops. Now, is euro a pair to watch for trading? Yes, when it's paired with a weak currency, because then it will make it bullish. For instance, if we look at the Japanese yen, he said the word. Look, I hate yen. Okay, I do, but I have to teach you, regardless of whether I like trading or not. And you'll see today, it panned out pretty good. All right, so here's the Japanese yen futures contract on a continuous basis. And here we have the buy side imbalance, sell side inefficiency formed over here. And we traded below relative equal lows, and we're cascading lower. We traded through consequent encroachment, which is the midpoint between premium and discount levels relative to the buy side imbalance, sell side inefficiency. So this is likely to draw lower after trading up into a bearish order block with a fair value gap right in here. I got to move it away from it so you can see it. So this candle's high right there, and the up close candle low. Fair value gap, bearish order block, buy sell liquidity pool, trades up into it there. During London, sells off. What's it cascading through? All of the imbalance here to rebalance all the imbalance of buy side only and no sell side. So now it's giving all the sell side up to this range. So we have an underlyingly weak currency, Japanese yen, with a modestly bullish euro here. So how does that translate into a trade idea? Well, which forex pair uses these as their base currencies and cross? Well, you have euro yen. So now think about what I'm showing you here. Euro is likely to go up to this point here, and it times this whole process of why is it bullish? Well, we gapped up, we came back down, filled in the gap. So this right here is whiplash, where you sell short from here down into the gap. Catapult would be buying inside the gap, sending higher. That's a flashback from when I was back on Baby Pips teaching back in 2010, 2011. Because we know this is likely to come up to this level, and we know that yen is decidedly weaker and could be weaker until it fills in its imbalance, euro yen is not bearish. So now enter retail logic. There's a educational group, if you want to call it that, and I'm saying that with my tongue in my cheek. Two guys over in the UK go by the name of Astro Effects, and they are, in my mind, the epitome of retail, pretending to be something they're not. And I go after retail logic, and I want to see what a retail trader sees in the marketplace, and then I'll go in and look for technicals to support the opposite end of that. And everything I gave you here technically was what I used when I looked at Astro Effects Face Man, his post he did on his Twitter account, and said he was expecting it to go lower. So I went right into euro yen, and let's take this out a little bit, and you can see we had a old low here. We traded down, took the sell stops out, and it rallied up. Then it retraced back in. This is an optimal trade entry, and I'll zoom in on a lower time frame in a moment, but for now I just wanted to show you the general framework. We took sell side liquidity out, we pressed down in, so we had offset distribution. So anyone that was already short with smart money, they're offloading it down here. If they didn't get it off here, they're getting it off there. then it rallies. What did this high being broken communicate on this candle? That market structure has now shifted bullish, and everything I just outlined with the euro dollar and with the Japanese yen, the relative strength is in euro. So euro is not likely to go down. What's the first currency in this pair? Euro. So if euro is by itself the base currency, if it's nothing paired to it, it's not likely to go lower. But Japanese yen is likely to go lower. So what I've done was I've paired up a strong currency on a relative basis. Not that euro was going to go higher. It's just it wasn't going to go lower. While at the same time, yen was decidedly weaker and likely to be weaker because of its imbalance. So there's room for yen to go down. No reason for euro to go down. There's reason for euro to go up, but up to a specific price level, as I outlined moments ago. We had this old high here, and if it runs to that, that would be enough for today. I entered right on this candle here, and I'll show you on the lower time frame in a moment, but just understand that this high being broken there set the stage for the New York session being bullish. So we drop down into the 15-minute time frame. All right, here's the euro yen 15-minute time frame, and here's that run above that short-term high that breaks market structure to the upside. So the market trades back down into this last down close candle here. Order block, optimal trade entry, starts the rally. Starts the New York session there at 7 a.m. The very next candle here, it's trading down. While it's trading down, I'm trying to get in this last up close candle right in here, because that is a mitigation block, because we have the optimal trade entry here. So inside of this range, I want to be a buyer. We trade down. I'm picking up the order there to go long. And initially I'm aiming for this fair value gap and then the short-term high right there. So I just basically just lined that up there, even though that everything I teach you sets you looking for this. And initially I gave the limit order. You can see it in the recording I shared on Telegram, with a projected high of 133.44. And we didn't quite get to it yet, so I was off there. It's went to 43.9, so I'm off by a pipette. But nonetheless, I changed mid-course because I was getting too close to the actual teachings, and I had enough for you all to know what I was doing. And the limit order was up here based on this old high, but I closed all the position off there above this as it rallied above it. So entering on this candle, exiting on that candle, using this short-term swing high here and this fair value gap. And I was originally going to take 80% off, leave 20% on to get to that limit order. But again, it's too close to what I teach here, and I don't want to have anybody belly aching to me, oh, you're doing this and you're doing that. I'm giving you practical lessons based on me answering frauds. Okay? So I would love to have this way of teaching coming up. Like, you're literally seeing it done for real, and the logic behind it, and why it's superior to everything else. All these other guys out here that show cars and spending other people's money, going in other countries and living it up on their dime. I'm not doing that. I'm teaching you how to go out here and find your own wealth and not rely on these image seekers. So entering on this candle here, you can see that is your price entry, and that's where I collapsed it all. But from a logic standpoint, riding up to this short-term high here was what you would be looking for, because as it's done this run up, notice what's occurred in that Japanese yen. It has not completely closed into that discount low of the fair value gap, or buy side balance, sell side inefficiency, I'm sorry. So it's still likely to go lower, which means that euro yen is still likely to go higher. Doesn't necessarily mean it's going to go straight shot up into a higher run, but until this completely closes in, that's the mindset I would have. I would not be trying to go short euro yen. Okay? And I did something else today. I traded gold. I couldn't do anything opposite to the retail guys opinion on gold, so I had to wait for it to go down below this level here to be a buyer. And in my Telegram channel, I had people ask me, what's this line mean? What's it represent? And I wasn't answering. But I was being facetious, saying it's probably nothing, probably doesn't mean anything, but I want to show you what it is, so that way you know what it is. It is the low here that starts this fair value gap, right there. So it was some sell-side liquidity resting below this low, and then we have this low that begins, what? This imbalance. So I want to be a buyer if it goes below that and capture some kind of a retracement, especially if I know that dollar's not likely to move. Then I could do trades like this with some confidence, knowing that it isn't going to completely break down because dollar's going higher, or vice versa. So I'm using the liquidity resting below that low and trading inside of that fair value gap there. Okay, so in other words, this is what you're used to seeing. That fair value gap, I was just trading as it broke below that low, and which makes it what? Institutional order flow entry drill on the daily chart. Dropping into an hourly chart, as it drops down, I'm entering on that candle right there as it goes below it. And all I'm trying to do is get up inside this fair value gap there, right above these relative equal highs. Too clean, imbalance. So when it trades up in there, I'm trying to capture that little bit of a move. And it was against being bearish gold. So in my mind, I was challenging myself, saying, okay, I have to trade this opposite. So retail Astro FX was shorting, or at least they say they were. I was buying the low and capturing a run up into this area here. And the other trade was GBP Australian. Right there. Take this stuff off. All right, so here's the trade. We traded down into this imbalance and order block, started to rally. Again, remember, we're not bearish cable, but it wasn't decidedly bullish either. So pound is the first currency in this pair. But now we have a problem with understanding what is Australian dollar doing. Well, I'll show you in a moment, but just for now, let me cover everything here, and then we'll go into Australian dollar and make perfect sense. So going long in here, I'll show you the order block that I actually keyed off of, but I was aiming for this short-term high because Astro FX had their stop loss there. And this is what? Fair value gap. And this would be institutional order flow entry drill. So even if I'm wrong about it not wanting to go lower, but eventually it could go lower once it gets to this point, from this area here up to there, I have potential range to trade and still be against retail. So drop into a 15-minute time frame. Here's my entry. I was using this order block right there. So in this candle right there, I'm going long and exiting right above the run in here. My limit order gets tagged, and I shared that also on Telegram. And all I was doing was being facetious about being 180 degrees contrary to a retail trader that gets all kinds of worship, thinks he's a king, and a supposed big to-do over there on Instagram. And I have done every trade against his logic. Mine are winning and his aren't. So I do this because not all of you are interested in seeing that stuff, but a lot of you in here that recently just came in have been fans of Astro FX and think that they do something spectacular. The only thing they do spectacular is spend your money if you paid them, and they rub it in your face, because none of them can trade. Neither one of them can. And that's the reason why they didn't go into Robin's World Cup. That's the reason why nobody ever does. And I show you the entries. I show you the exits. You're seeing the logic behind it. YouTube isn't seeing this, and Telegram ain't seeing it. But I'm teaching you with real examples of how I used retail logic against them. Everything was against that logic because that is flawed. The order block here, because we've already went down into the order block on the hourly chart and we started running higher. So it creates the low of the day in London. So this candle right here, that's the end of our London kill zone. That's 5 a.m. That caps that range of time. Isn't it interesting that that's the actual low of the day? Right there. So there's time and price. That signature was noted by me before I took the trade. I said, okay, we have a turning point there. Everything is respecting as I would expect to see. Every down close candle that's traded back down into here, does it send price higher? Yes. This down close candle, once it trades away from it, does it respect it and go higher? On here, yes, it does. So I have this down close candle. So what am I going to do here when it's trading back into it? I'm buying it. Where's it going to go? It's likely to go above this short-term high and go into this imbalance here. But it's limited on its upside, as I've shown you on the British pound and the euro. Those futures contract prices showed very specific limitations to upside on both euro and cable. So I have to be very nimble with where I'm trying to get out at if I'm going higher in it or a pair like that. Well, I'm going long pound Aussie. Why am I also only interested in getting around right there, which I'm a little irritated by because this one went just a little bit higher. I would have rather been on that candle exiting. OCD, I know. But this buy side liquidity pool, that's the logical area for the algorithm to reach for. But then once it goes there, go back to the original premise. Euro and cable are not likely to expand on a grand scale on the upside. In other words, it's not likely to see a big momentum move on the upside. So if it does go up, what's it reaching for? An imbalance or buy side liquidity? Well, there really isn't any imbalance in here. You can't look at this and this and say, oh, that's an imbalance, because we've already been here. We've already been here. What makes that significant? Because we had these last two up close candles, and the change in the state of liquidity happens right there. Then we have this next run higher, but it's only a stop run. So you have to cancel all this move out and focus primarily on what? These up close candles here. That's your bearish order block, not this. This is a stop run. Cancel all this out in the chart. Don't even pretend it's not even there. The narrative is these up close candles, and then we break again lower than that one. So we've passed down below this low here and then came back up. Forget this candle, and then this one starts off going lower. So this is not a fair value gap. That's why it doesn't sell off right here. I'm convinced that they have got their hands on leaked content, or maybe they're even in here, and they're trying to rush trading some of my concepts, because the things he's trying to do, if you look at his charts, they're real close to imbalances, okay, like fair value gaps. And I think he's probably drawn an affinity for it, but he doesn't know how to trade them because his narrative analysis and bias is wrong. Which is why I say leaked content doesn't make you a student. You can't learn from that. You have to be under my wing for a while, and just seeing pieces of my stuff isn't going to be it. So when people come in here and they find someone that's selling and they quit, and then when I capture them and throw them out, they come back and say, oh yeah, I had problems 3 months ago. I never bothered to email you to say why I'm not going to pay you anymore, but now because I got their source kicked out, now they want to come back in. Leaked content doesn't make you good. It isn't going to instruct you on how I trade. You have to be part of this community. And even when we get through all the content that I'm going to give you for the rest of this year, you still will have to be tutored by me, because I'm going to tell you how to take this stuff and put it together. It's not, oh, when ICT's done, I'm going to leak everything and that's going to be it. Even then, it still isn't going to matter, because that's why this is a lifelong community. I'm going to be able to guide you by putting lessons together, by simply saying, take this lesson and this lesson and this lesson, put it together, and you'll get this. That's why it's compartmentalized. It has to be that way to learn it, but also it allows me to put things together in future lessons that makes it very meaningful for you as a student, and it won't take a lot of time for me to go through videos and explanations, because you know exactly where to go to get it and put them things together, and you'll have something to be useful. But anyway, let's take a quick look at Australian dollar, and you'll understand again the logic why this was likely to be as you saw. All right, and here is the hourly chart on Australian dollar. So we had the market break below this low here. At this low, is this the true low, or is it this low? It's this low. This is a stop hunt. It sweeps below that low. Remember what I just showed you on the pound? It was, or pound Aussie. It rallies higher to take stops and then moves away. We ignore those candles. You ignore them. Interbank traders ignore them because they've done their job. So you have to erase that from your perception of looking at the chart and go back to where the root of that turning point is here. This is a catalyst for running out liquidity. This is the underlying narrative of the turn. Then anybody that's right, they take them out with that pass right here below that low. So you want to be focusing on these bodies of these candles because that's where the bulk of the volume is. That's the true narrative. This is just an event. The narrative is it turned here, starts going higher. So how's that useful? Take that low, project it out in time, you get this area right there. So what is this? That's your fair value gap. So Australian dollars likely come back up to this low. Yeah, that's traditional support and resistance theory. And I told you there's sometimes that will work, but not all the time. And I'll tell you how to find the periods when it works. This is one of them. This here that gets swept, go back to this, that's your real low. And then right in here, if it goes back up to that area here, that's it for the day. If it goes up to that area there, which it does, you're done. Now, toss in one other caveat. What else do you see here at this low? Keep going to the right. What do you see? Just above it, what is that? You know what that is. It's a volume imbalance. So the volume imbalance here perfect. Now's the high of the day. So Australian dollar, is it extremely bullish? No. Is it bearish? No. It's likely to trade back up to this area here and do very similar price action to what? Pound. Only go up to a certain point and stop. Now, it does not look the same because it has this initial run lower, but on the upside, that's what I'm focusing on here. The upside is limited. It's capped. So, using this information with pound Aussie, any move up in pound Aussie, because they're both muted, they're being held, they're not being allowed to be really liquid, higher or lower movements. There's nothing free about their trading, both Aussie or pound. So if you use that logic with using Aussie compared to pound, the pair is pound Aussie. So it's natural for me to expect it to run from here to here and then stop dead in its tracks. And look what it's done. That very thing. Now, you've heard me say things like this before, and it gets on some of you that's been here a long time skin. Okay? I get it. I understand. But I have to say this to constantly make a bullet point about it. This is not beat the market maker stuff. Okay? This is not Chris Laurie stuff. This is not Wyckoff. This is not supply and demand. It's none of that stuff. Okay? I just exposed how the interbank literally went through all of the pairs today, and I literally traded with that logic, going against the king of retail logic over there on Instagram. So my question to you is this: do you want to trade like this and have to have a setup every single time? Because if the dollar is consolidating, this is what you do. You go through the process of ferreting out the strong versus the weak. And then you find the pair that's basically designed to do that very thing, put the strong against the weak. And you trade that pair. But also, are you interested in taking trades like this? Because some of you, especially the young men in here, they want to be able to do what I did today, which was basically make a mockery of the young man that's been talking ill about me. And my question is do you want to take these types of trades simply because it shows a willingness to go against retail traders? Or do you want to take the trades like the euro yen, which was the better of the trades because it took the stronger against the weaker, not stronger in the sense that the euro is going to go higher. It just was likely to go up higher, but not by much, but certainly wasn't going to go lower. But yen was decidedly weaker. So therefore, euro yen is a long. That's the trade. That's the one that you should be focusing on. if the dollar's in consolidation. Now, some of you have been here for a while know that I've taught this before. I have taught when dollar's in consolidation, you immediately go to the crosses. But now think about what I also said. Euro and cable are muted. They're not being allowed to move. So if they're not likely to move, is euro pound going to have a lot of movement today? No. Let's look at it. Euro, GBP. Nothing. This little bit of a run here, but that's it. It's gone nothing. But where was the move at today? Euro, yen. That's your big runner. And if you take all this mumbo jumbo off, that's your nice big move. And I show you how to find it. And I outlined the move. I mean, yes, I had to get out, and the high was just one pipette short from what I was looking for. But nonetheless, is that the type of trade you want to be trading when it's in consolidation? The answer should be yes. Your head nodding yes, Michael. That's the one I want. I don't care about doing these little tiny tit for tat types of trades to be able to say I was the counterparty to that guy on Instagram or that guy on Facebook or that guy on Twitter. I do that because I needed to vent, and I had a lot of hostility from last week being stressed out. So I promised my wife that I would go out one more time today and do this and just bury this whole contrast that, I'm an old man, trade demo, and I'm broke and I can't trade. I basically, revealed the underlying truth that I've been saying all along, that these guys over there on Instagram are fake. Okay. And that's the reason why none of them ever are going to go into a third-party audit competition, because they can't hide and they can't fluke it, they can't fake it, they can't pretend they can't use their MT4 servers. And now, for whatever reason, why this young man feels like he wants to go out and put ideas, not trades, they're just ideas. And this is what I don't want none of you in here to do. Don't learn what I'm teaching you here and go out and do the real thing of what he's trying to do and everybody else over on Instagram. Don't do that, because you're inviting all the wrong ideas. And honestly, what I did the last week or so by doing this in my Telegram, I was literally attacking my younger self. That was me punishing my younger self. I already know that I'm better than that kid, okay? He can't trade. But what I was seeing was the same kind of stuff that I did when I was a younger man. I needed to be humbled back then, and nobody cared to bother with me. And now, because I'm older, I can see that no one else is willing to do it, and I just needed to get it off my chest. And he's got people thinking that, for whatever reason, I can't do what I claim, and I've done again what some of you have asked me for. And it's mainly the new group, because that's the largest of all the groups that came in here. Your concern was if I couldn't cut the mustard with Sean Lee from Astro FX, then maybe you shouldn't be here. Well, here's what I'm telling you. If you're not convinced now, nothing ever is going to convince you, because he's never going to go into the Robbins World Cup against me, and he can't call the market right. And I'm showing you examples where I'm getting in. I'm showing the executions. I'm showing you the targets being hit. That doesn't happen. It's not happening with anybody on YouTube. It's not happening with anybody over there on Instagram. And the only folks that seem to be pressing buttons are my students. That's it. So you are at home here now. Okay, you are at home. There's no reason for you to ever doubt that you're in good hands. You are. And just because I can go out here and do this against everybody and make them look ridiculous, I don't do it because it invites my ego, and I love that. And I have to fight that a lot. That's the number one reason why I keep my comments off, because it's going to attract my attention to that. And man, is it easy for me to do that. I'm like chasing cars, because I have a lot of targets and they're easy, and I don't want to waste my time doing that. But this one needed to be done. I was planning on doing him next year. He was going to be the first one on my list, but I've already canceled him out. Now he's done, because he can't trade. But please don't send emails and ask me about Sean Lee from Astro Effects anymore, because I have thoroughly washed my hands of him and everybody has seen it now. That's the reason why he's never done anything beyond what he's done, and that's it. So if I have not satisfied that and you feel that it's still not significant enough as in terms of evidence, I'm not going to show you my cars. I'm not going to show you my homes. I'm not going to show you my bank account statements. All that stuff would literally put him on a totally humbled level. And I don't need to do those things. And hopefully you didn't join for that kind of thing, because I don't do that here. If I would have done it ever, it would have been on YouTube. And I don't do it. So, anyway, the takeaway is this. I've gone through the process of using what I teach you here. If dollar is in consolidation, it's being held. It's being held in a specific range of price that you already knew about. It's not trying to leave that fair value gap. So if it's not trying to leave the fair value gap, when we cross over to the New York session, remember, that's the session I told you all to focus on. That's the easiest one. And it did not take you to join my mentorship to learn that, because I said it on YouTube. I said it back on Baby Pips in 2010. New York is the easiest session because it gives you all of the understanding that I just outlined here. Because your question is going to be, well, how do you know it's not going to run above these relative equal highs? How do you know it's not going to do that? Because everything I just outlined, the dollar is not trying to go anywhere in London. It's going down to this level here. Fine, that's okay. Big deal. Even if it goes outside of that range a little bit, what's over here? A volume imbalance. It goes down to the volume imbalance and comes right back inside the range of the fair value gap. These are all things I teach you. And the uncertainty or the fear of not knowing what to do, that's normal. That's normal for you to feel that. And I told you, you're not going to watch a video one time and suddenly you're ICT junior. It doesn't work that way. It takes a lot of time to get good, really good. Decades, okay? But to be profitable, you don't need decades, okay? To be profitable, you need to resist a lot of things in your development. And you're going to want to do things like some of you watched me do today and last week, because that makes you feel significant. That makes you feel like you've accomplished something because you smashed somebody out there that's a fake. If you think that way, you're going to end up living your life like that. And you're never satisfied, because there's always going to be some joker that comes along. I literally want to call an open season on everybody on Facebook, Twitter, and Instagram next year. Like, that's exactly what I want to do. But it isn't going to convince everybody. It will be just me flexing my ego. And that never is satisfied. So what you should be thinking is, I just showed you 3 different styles of trading. A reversal on gold. I was going long in the highest probable strongest pair, euro yen, when retail was thinking it was going to go down. And I even traded inside of a small moving pair across, which was pound Aussie, which was going against that same retail logic. They thought it was going to go down. I went long, but I knew where it should stop based on what I showed you in these lectures here today. The takeaway is, don't worry about these little moves like pound Aussie. Can you make money with them? Yeah. But is it worth your time? I don't personally think it was. If it wasn't going against a retail guy, I would have never even did the trade. But I know what I'm looking for. I know what the algorithm's going to do, and you're learning that too. So how do you take away from this? Well, if you wanted to be in the choicest of all these setups today, while all 3 were profitable, the best one is euro yen. What makes it the best? Because it was when a pair that was decidedly poised to outperform the upside, because you had the weakest against the strong, and everything logically was there. Yen had more room to go down. It was easier for yen to drop. So you look for pairs that contrast a strong against a weaker. So I could have very easily done pound yen, because pound is similar to what we saw in euro, which was not weaker, but moderately bullish. Not because it wants to go higher, but because it's refusing to go down. That's important that you have that in your notes. But same thing here. optimal trade entry here, relative equal highs, runs. There's your two pairs. But euro yen, in my opinion, was better simply because euro and cable, euro had that gap. Okay, remember the gap I showed you on? I could easily turn this lesson into 4 hours. Hang on here. All right, we had a gap here on euro. We did not, notice this, we did not have the gap on pound. See that? So why did I buy euro yen and not pound yen? Number one, retail was going short euro yen, and there's the gap in euro that's not in cable. Didn't have any gap. So it was not showing you. Remember I was teaching you about gaps on Sunday. If there's a gap higher, that's indicating that it wants to go higher. It's in a hurry. And that's what an interbank trader is looking for. That's their tip off. That's the tell. Because they're not calling in a hotline. They're not going to a website and the central banks are saying, okay, all you traders do this. It's not an advisory service. They're looking for signatures that repeat. The euro has that gap. Right here at the beginning of the week. That's your tip off. That's the leader on the upside. Doesn't mean it's going to continuously run because of everything I've outlined here. All the imbalance and these lows here and this small little imbalance. It's going to go to that point and then that's it. You're done for the day. So it's not going down, but it's going to go up to this price point here. Once it satisfies that, then you need to be either getting out or trailing your stop loss up in your pairs that are pairing the euro against a very weak currency, which was yen. So euro yen, at the time of this occurring, that fulfills its upside objective and that short-term swing high. And I know some of you students in here, your head's spinning right now like, man, this is too much, too fast. Right. Because there's lots of other lessons you're going to have to go through to really get what I'm showing you here. But charter members are loving this lesson because now they're saying, wow, I'm seeing pieces of what he's taught, and I literally did it today and showed you. I showed you it. I didn't talk about it in hindsight. I didn't wait for it to move and say, oh, look at this. That's what everybody does when they learn my language. I know what I'm talking about. You're home. So stop worrying about all these other people. If you want to quit, don't make excuses for why you want to quit. If you can afford it, just quit. If you don't like what I'm doing outside the mentorship, don't watch what I'm doing outside the mentorship. Okay? That's my personal time. I can do whatever I want on my personal time. And I'm not listening to people send me emails saying, you shouldn't do this. Don't tell me what I should do or what I shouldn't do. Okay? I don't ask for your advice about those things. Okay? I've earned the right to do whatever I want to do. I don't need anybody's permission here. But when I do those things, you all benefit because I'm coming back to you, community that's going to receive more insight than the public will. You're getting insights from something that I did. Why was I doing what I was doing? Not, am I ego tripping or am I losing control of myself? No, that's not what I'm asking. But why was I making the decisions I was making that panned out profitably? Those decisions were made on the basis of the things I've shown you here. Me getting out here and just completely closing it because I didn't want to draw any attention to running up above this high, even though that's a common understood thing in my free tutorials. They're all scratching their head here, trying to figure out why I took it all off there. Why didn't I write it all over there? That's exactly what I did. It's called chaff. Okay. I'm putting chaff out there. And I've done this for years when I did public stuff and YouTube videos on baby pips, because while I was able to do a lot of things, I didn't want to teach everything I knew that you have been exposed to. So I throw out these little things in here, just like the guys that were asking, why do I have that line on the gold chart? Well, it's institutional order flow entry drill relative to the daily chart. But I was just misleading them by not answering directly. Because again, I'm not obligated to these people on Telegram. I am obligated to you. And it's my interest in seeing you understand what I do and how to replicate that in a skill set that you learn over time, not by watching a video one time. You're not going to understand what I just showed you here by one passing, especially for the new group. Okay, you're going to need to go through to chart, remember. Okay, and then you're going to come back to this and think about all these ideas. The relative strength analysis, which is what I just went through briefly. I didn't call it that, but that's what it is. Anytime you hear in the mentorship teachings relative strength analysis, that's what I did. I'm looking for relative weakness and relative strength. And when the consolidation is occurring in the dollar index, that is what an interbank trader sees as, okay, forget the majors with the dollar. Forget that. That's not where I'm interested in. They immediately go to the crosses without the dollar. I'm not saying that dollar yen did not rally today, because it obviously did. Dollar yen. There you go. But this run here is just based on not strength in dollar, but underlyingly weaker yen. Yen prices are weaker, and that's what causes this here. So if you compare and contrast that with Japanese yen futures continuous contract, that sell-off here is what's driving the dollar yen, because it's not occurring because of Dixie. You see at the same time here, dollar's flat. You see that? That blue line, that's the delivery of dollar. It's nothing. It's doing nothing. It's going sideways. So the underlyingly weaker delivery on yen is the catalyst that sends the dollar yen higher. This is moderately bullish because it's not bearish. Not because it wants to go higher. It's moderately bullish because it's absence of bearishness. In other words, the dollar's not likely to go down, but it's not likely to go up either. But when you have that with a weaker currency like yen is here, that will make dollar yen go higher. Okay, so I've crossed all bridges here, showing you how to strip this down from a top-down perspective using the things that my older students here know about. I didn't recreate anything. I didn't create some kind of new language. I didn't create some new tip, new tactic, new concept that I haven't already introduced. Here it is. It literally was done for you today with a button being pushed. I gave you the framework behind it now. You understand why I did what I did today. You understand the logic behind it. And you also now know how to go through the process of looking for it in the future. If you ever have gaps, okay, the gap is indicating a rush to go somewhere. Okay, and if you have a currency that doesn't have a gap, that cancels it out for relative strength analysis purposes, i.e. British pound. It did not have that gap higher like euro did. Euro futures showed that higher up gap. That to me was that's the currency I want to be looking at. That currency is going to have the mover. If I can find it and pair it with a decidedly weak currency. Now let's look at, in closing, let's look at Euro, Aussie, because both those pairs, remember Aussie was similar to cable and Euro, it's limited on the upside but not likely to go down, remember? So this pair isn't going to have much movement either. And let's take all this stuff off here because it's not salient. And here you go. It's done nothing today because it's a pair made with two currencies that are likely to go nowhere. Now, you see all these folks out here on Twitter. You see all these folks out here on Instagram. You see all these folks on Facebook, Twitter, and on Forex Factory's forum. Okay, I literally go through those forums in the morning before I do anything. That's what I'm looking for, that retail logic. And I just pinned the tail on the donkey from AstroFX today. And I used that guy's view on what he thinks is going to happen in the marketplace. And I used the concepts that I'm teaching you here. So what am I doing? I'm taking the weak hand, nobody knows what they're talking about from a retail perspective type of trader, and pitting against how the interbank algorithm is going to reprice. Who's going to win an arm wrestling match? And all I'm doing is siding with the side that's going to likely win. That's it. That's what makes me ICT in the public's eye. I do that consistently. And everybody sees the difference when I do it. And it doesn't make me arrogant because I'm doing it. It just means that I'm informed and I'm proving conceptual theory in practice, applied practically. And I'm doing it in stunning fashion because I'm doing it against these worshipped idols that have no skill set or deserve your worship. And I'm ending it with, I don't need or want your worship, and I don't need glad handing, I don't need applause, I don't need any of that stuff. But when I do these things, just know that there's a large group of people that are asking me because they're on the fence. They're waffling about, should I stay here? And it doesn't matter how much I've done prior to this. If these folks that are students of mine are asking for this, I feel obligated to do it because it's something that's easy for me to do. I enjoy doing it. And you get something out of it on the other end. Like this, you're getting a really rich lesson. Nobody teaches this. No one teaches it. No one. No one teaches like I just showed you here. Okay? Now, you're going to say, well, no, Steve Morrow has a teaching where it's fractional disparity. That's a rebranding. That is a small little piece of what you just got shown here. I showed you the complete breakdown of which moves are going to have more momentum, why it should stop, where it's going to stop, and how to find the relative weak and strong currencies. There's nothing like this, folks. And it gets so much better. So just relax. Stop doubting, okay? You don't need to worry about doubting. When's the last time you saw... Now, understand what I'm about to say here. I'm meaning this with all due respect, because you know my sentiments about Chris Laurie. But when do you see Chris Laurie going out here and proving like this? Because I get so many times, some of you in here, pushing emails or pushing things that you saw that people are saying I'm teaching Chris Laurie stuff. I personally have never seen Chris Laurie do trades. Like, I've never seen it. I've never seen him execute. I've never seen him do any of those things. I'm not saying that whatever he's doing now, that he's doing that. I'm just saying I have personally never seen that happen. And I don't ever see anybody else out there doing it either. I don't see Steve Morrow. I don't see him. I see a marked up chart with a little line where he's putting a slash, where he supposedly bought up there once it starts moving 20 pips or 30 pips. So for the folks in this community that are always caught up in all this friction and drama, you don't have to worry about any of that stuff anymore. Why are you giving it any of your time? If you're in here, your focus should be on learning. Did I answer the call for this? I think I have. If I haven't, there's nothing else I'm going to do beyond this. Period. This is more than sufficient. It's proof of concept. It's a button getting pushed. I'm showing you in 3 different markets all the things that I'm teaching you, and every single one of those were profitable. And if you only picked out one of them, it's still good enough. But I'm showing you the contrast between all 3 and how your mind should be viewing price action. Yes, there's a setup I can find in just about any pair out there. And even if it's a small little move, I can do that. But is it something that you should be doing? No. Waste time doing little moves like that. If you missed a big move, then let it pass and wait for another day. That's the takeaway from here. But if you're going to do the work to find the real big move and focus there. And don't waste your time with these smaller moves just because you need that little nudge of, yeah, you're better than the average bear. You don't need that. That's the stuff that I ingrained in my personality, which is a flaw. This stuff that I'm doing, the young men in here are looking at that and saying, that's what I'm going to do. I'm going to do it out there, and I'm going to do it 30 times more than ICT does, because I'm going to defend his name. I'm going to defend what I've learned, and I'm going to kill all these fakes in the public domain. And I'm going to tell you that that's a character flaw. That's not a strength. That's a coping mechanism for me, because I have something I can never satisfy. That insignificant young man at 20 will never feel significant enough because my grandparents don't see what I'm able to do now. So I have to do those things. Don't start your journey or hold on to baggage like that. The ideal method is for you to grow out of those toxic thinking and never resort to doing what I do. And that's the part that makes me a weak mentor. Now, I'm showing you the pluses of having done it because, like I said, I'm like a dog chasing cars sometimes. I turn my comments off not because I'm afraid of anybody, but I know I'm going to get someone saying something and it'll distract me. And then I want to pulverize them. And that will be something I'm doing versus doing other things, whether it be in my personal life or mentorship or whatever. I don't want you thinking you should do those things. And I want you to know that I am cognizant of the fact that these are not characteristics that a strong mentor would try to promote. And I'm not trying to promote that. So that way you understand clearly that I'm admitting that these are character flaws in me. But they are a coping mechanism because I am not as balanced as you might see me as. I have many things that I wrestle with. And for me to be able to cope with it from a psychological standpoint and a chemical standpoint, because I do suffer from a chemical imbalance. And when I get triggered, I got to run with it. And no one's talking me out of it. My wife has learned over the years it doesn't work. So she stands out of the way, lets the cyclone go through, and then she comes back and she tries to play the voice of reason afterwards. And sometimes I'm guilted into feeling shame. And then other times I'm telling her I feel vindicated. But either or, nothing's stopping me when it starts. It's like a hurricane. You can't stop it. You just let it do its thing, and then you pick up the pieces afterwards. And sometimes I'm embarrassed to say that I've caused more damage than I wanted to, and it is not as constructive as I wanted it to be. But for me, from a personal standpoint, it's very satisfying for that moment. But then I weigh it out with, okay, what do the people that respect me and love me and look up to me see when I do those things? And I had that experience with my children because they saw me ripping into that Yahoo on YouTube that's a fake. And I used language I shouldn't have been doing. But that's what happens when I engage. That's the reason why I keep my comments off. It is not fear, folks. I am not. I'm begging for it. I've been begging for it for how many years now? I mean, I'm literally going after everybody, telling them, let's go, let's go, let's go. Because I know what I'm able to do. That's not a strong characteristic in a mentor. That's someone that's unstable. That part of me is what's triggered with these goobers. And as much fun as it is, and easy it is for me to just thrash them, it is not mentorship grade. But once I get my clarity again, I come back because I know I'm able to go into it and give you a lesson from it. I don't want to have to teach this way, is what I'm getting at, okay? And you shouldn't be warming up to the idea that this is the best way to learn. But I also want you to know in closing that you have a mentor that can absolutely do this. And I am not afraid of anybody on Instagram, anybody out there from a Goldman Sachs background, UBS pretend narrative that you used to work at a bank. All these people, none of them can stand against what I have. And you're learning it. And focus there. Look past my flaws as a human being and just understand that every time I do the things I do, it's not meant to take away from you as a student. But there are times when, as a human being, I gotta lash out because it's hard to keep it bottled up. And unless you have what I have, you're not going to understand. To be bipolar, it's something that you can't control. And when I'm triggered, that's it. And I'm like the Tasmanian devil. That's it. I start revving up and that's forget about it. And feelings and rational thinking, that's out the window. Okay. And that's why I try not to get into those types of things while we're in mentorship here, But I'm only bringing this one in and talking this way with you all, so that way hopefully you have a balanced perception of what it is I've been doing the last week and a half. Because I had a guy send me an email saying, what are you doing? What the hell are you doing? Why are you doing this? And you should be spending your time. And I just basically said, quit. If you don't like it, a whole bunch of other people supposedly, he's saying, all have that mindset. They're about ready to quit. Well, if you're ready to quit, then quit. Don't tell me you're going to quit. Just quit. But you're learning things here that you're not going to learn anywhere else. So, again, I'm not the perfect mentor. I'm not the perfect human. I'm not the perfect Christian. I'm not a poster boy for Christianity. I am a person that wrestles with things that I can't overcome all times 24/7. And I know what those triggers are. And it's not fear. It's I'm dying to engage everyone. Like, I want that. My flesh rises up every single time I turn on YouTube or Twitter or Instagram or Facebook, because I see all these guys out there pretending, and it would literally take me nothing, like I did here. I don't need Robin's World Cup, but I know there are certain venues that are appropriate for some of these guys that pretend to be kings and gods. That's the big word. They're all calling themselves Forex gods, and it just is a joke. They're puny gods, if that's what they are, because none of them want to come out there in a third-party audited setting, and I'm begging for it, and no one will join it. So what does that tell you? They're not willing to do it. So what do I have to do? I'm going to go do the next best thing. So if they say it's going north, I'm going south, and I'm going to execute a button where they didn't do any of that, and I leave the audience to make up their mind. Who is the truth? Who is telling the truth? And who is showing prowess? And that's how I've done it all these years. It's the WWF approach. I don't need to advertise. I go out, I do what I got to do, I say what I got to say, point to this, point to that, execute, done. And then wherever the pieces fall and how the dust settles, the audience that viewed it makes up their mind. I've never advertised. And when people see that, they're convinced. And time goes on, people forget about it, or they didn't see it, or they find a little niche in the community out there where they're not familiar with ICT, so therefore they can say, yeah, this guy's fake demo trader and he wouldn't join me in this contest or that contest. And that's not true either. Like, I'm the only guy out there begging. And it's ridiculous, because if I would have been on the other side of this, man, I would have been in there a long time ago. I would have been like, come on, Michael. You said you're going to do all that stuff. I would have been there like last week. Like, come on, let's go. So anyway, it felt good to get it off my chest and to divert a lot of the frustration I felt over the last week with my daughter's predicament. She's better now. Has a little bit of a shortness of her breath, but she's doing markedly better, and I'm so thankful. Thank you for your prayers. Thank you for your concern, and hopefully you learned something from this today. Until tomorrow, it won't be a video tomorrow, okay, so that way you know. But until tomorrow, I'll talk to you by way of PDF lesson. Be safe.